Hello and welcome to Decoding Risk, where we give you expert insights on trending topics in the insurance industry. I'm your host, Edward Pronley, one of the marketing content managers here at Fusable, and we have an exciting episode for you today where we dive into Fusable's most recent partnership between our risk division and the telematics company TruckerCloud. And joining us for our episode today is Gavin McPhail from Fusable and Spencer Mitchell from TruckerCloud. Thank you both for being here today. Before we get started, would you mind giving us a little bit of background on your experience in the industry? Spencer, do you want to go first?
Sure. Yeah. Thanks for having us, Edward. Looking forward to the conversation today. Gavin, it's great to see you. Little bit of background on TruckerCloud and on myself. I'm the CEO of TruckerCloud. The company is the leading telematics data platform for commercial auto insurers. We started a handful of years in the trucking space. Really, we saw insurance companies sort of craving telematics data, craving insights into more risk, and sort of the right ways to price and understand fairly that risk. We saw this trend pick up a couple of years ago and really grown significantly across the industry. There's a lot of reports and various things that talk about that, the adoption of telematics. So looking forward to having that conversation today. Just background on myself. I didn't come from the trucking or insurance space. I can come from the data space. Started my career at PricewaterhouseCoopers in oncology data consulting. My background is in genetics. And so what we did was work with cancer institutions to think about how to marry up genomics data and clinical data and sort of create software products, create insights based off of that. So it was a natural transition into insurance in a way, because you're still looking to predict outcomes and identify, risk and predictive factors based on data, right? That's what insurance companies do well. And so there's a little bit of a natural fit there, but looking forward to the conversation today and thanks again for having us.
Yeah, absolutely. Thank you for being here. Gavin, do you want to tell us a little bit about your background in the industry?
Yeah, no, absolutely. Thank you, Edward, and good to hear from you, Spencer. Great background. Hello, folks. My name is Gavin McPhail. I lead the risk intelligence business here at Fusable. Our lead product in this market is our CAB, our CAB product that supports the underwriting process, specifically for motor trucks, motor carriers. We've been aware of what's happening in this market. Loss trends are on the way. The application of data analytics has a significant opportunity to help move the needle for insurance carriers and for motor carriers as they need insights into what drives their loss costs and what drives negative outcomes. So it's a win-win across the board. We're excited about the partnership here with TruckerCloud. We see both CAB as a leading provider of inspection-based risk scores, along with TruckerCloud's leading edge and telematics-based scores, and bringing the two of these together to really help move the needle for the industry. I don't have an oncology background like Spencer does. My background is entirely insurance, sort of a resident insurance nerd. Earlier in my career, I helped launch and develop the telematics product for one of the leading insurance carriers. So I'm particularly excited to get back to my roots and bring this capability into the trucking space. So great to meet you and look forward to the conversation.
Thank you very much. So can you both tell me a little bit about this partnership, like what clients can expect from the partnership between Fusable and TruckerCloud?
Gavin, you want to start?
Yeah, no, I think we've heard loud and clear from a number of our clients that while the promise of telematics and the power of the inspection data is evident, it's obvious, carriers are looking for more signal and less noise. So what that means is getting their underwriters just fragmented pieces of information it's a feast of information, but unless it drives to an outcome or a decision, it gets particularly difficult. So our goal really in the partnership is to bring these two very powerful, insightful data elements and merge them together into one answer that fits seamlessly into the underwriting workflow. We feel that resonates. We've heard good things from the market in that overall direction. And it's something that we're bringing unique to this space and look forward to building it out. So I think that's my view.
Yeah, we're sitting on the opposite side of that, but for the same reasons. Yeah, we're really excited about this partnership and are already seeing what it can do in terms of bringing telematics data into CAB and into an integrated platform. So the reason we entered into this is because, frankly, CAB is one of the most ubiquitous, widely used softwares in a specific industry that I've ever seen. I mean, the amount of, sort of the sheer volume of premium that is quoted and analyzed using CAB is really unique, and the market share that they have. And so for TruckerCloud as an emerging company, we've grown a lot over the last few years, but we don't have the relationships, the same level of relationships that CAB has, that it's built over the last decade plus, right? And so for us to be able to bring telematics data into the place where underwriters live, loss control lives there, risk engineering lives there, claims a lot of times lives there as well. It's a really unique opportunity to bring telematics data into that workflow. And it's amazing to us as we kind of analyze the industry, looking at that level of market capture and the sort of the breadth and depth of people connecting with information. I've talked to so many clients who, whether it's on the underwriting side or on the loss control side, they go, "Oh, let me go check CAB for that. That's where I live. That's where I do my daily operations." So the ability to bring telematics data into that place is really unique, really powerful, and really takes advantage of CAB's infrastructure and what it's built across the industry as being that source of truth and that standard for companies.
That's fantastic. So it sounds like this partnership is really going to be great for all our CAB clients to be able to use that telematics data and get even more granular with their data analyzation. So that's awesome. Even in the personal insurance space, I've seen ads and hype for telematics, like with the Progressive commercials that can track your driving behavior. So I'm assuming it's an incredible tool for insurers, but why is that? Why are they so interested in the data that telematics can offer?
Gavin, I'll start, and then because you have a really interesting insurer perspective, and I'm looking forward to hearing that from the provider perspective and what we're hearing from clients. It makes the underwriting of insurance more fair, ultimately, for the motor carrier and for the insurer. Right, trucking insurance is a really unique market where insurance companies, a lot of times due to MCS 90 regulations, they're on the hook for all trucks under a DOT. Like, that's something that is really unique to trucking that doesn't necessarily happen in personal auto. That there might be vehicles out there that haven't been inspected, haven't been endorsed on a policy, but they are being covered by the insurer. There's also a huge amount of there's a huge difference in trucking in terms of the exposure. Right. In personal lines, you're writing a fleet, you're writing an individual or a family who lives in a certain place, and you can assume that a certain number of their miles occur within a distance. And then, depending on how far away your work is and how much you drive to work, you get a pretty good idea of how far people drive and where they drive. And then telematics is ultimately uncovering some behavior type of information about that individual or about that family. But in trucking, you've got vehicles traveling all over the place. Those vehicles might never really be where they're domiciled. You get a huge difference in the number of miles that people are traveling. And so insurers are ultimately guessing at these factors. And because commercial auto and trucking specifically has been largely an unprofitable business line for insurance companies over the last 10, 12 years, insurance companies are really looking for a way to price fairly and effectively, because if they don't have that information, they just have to kind of assume the worst. They have to assume that you're driving through the worst geographies and that your mileage is a certain component. So how do you reward fleets who are operating in safer zones, right? Or who don't have as much exposure, as much driving exposure, as much mileage as others, right? It's in the insurance industry, there's a small number of players driving outsized loss costs in the industry. And so 80% of fleets should probably have lower premiums, right? And that's, as we get into, the adoption by motor carriers, one of the things that we'll talk about there. But ultimately, telematics data in commercial lines and in trucking unlocks so much information, not necessarily, I think, frankly, the behavioral data is not as important in trucking as it is in personal lines. It's the when you drive, where you drive, how much you drive, that has such a variability in the trucking industry that we don't have in other lines, and it makes it really hard for insurers to predict. So telematics data brings that information about a fleet to that insurance company. I've had insurance companies tell us, hey, we've been requiring telematics data for the last 6 months, and I've written more accounts than I would have written otherwise, because when someone says, hey, I don't drive through South Florida, I can look at the information and say, oh, okay, you're right. I can price that more effectively. I can price that, it lower than if I were to sort of assume the worst, right? So it actually allows insurers to segment risk more effectively, to give motor carriers who are being honest in this insurance process the right price, a better price, and then price other risks more effectively as well. So that's what we're seeing is it's getting a more fair price for between the insurance company and the insurance. And I think that's, it's obviously really important to everybody. Everybody wants the world to be fair, right?
Yeah. Sounds like it would be good for both the insurers and the policyholders, and that sounds fantastic. Gavin, do you have anything you want to add on this?
So I think that's spot on. I mean, insurance companies have an important role to play in our community to help incentivize the right behaviors that drive safe outcomes. They've always segmented up the market based on pricing variables. So if you go to personal lines, Asian or marital, here in motor trucks will be business class, state, region that you're driving, tenure of the operation. And those things are predictive. They'll help you correlate to loss costs and price more effectively, price to expected loss cost. But if you thought about it in terms of your ability to shape behaviors, provide feedback on risky activities taken versus not taken, the business class that you're in and the state that you're operating, is it particularly something I can manage to or change? Give me feedback that I'm operating in a high risk segment. That's okay. That's not a lot of power I can do to change that. You start changing the way you price to how you're driving, where you're driving through, how many miles you're taking, inspection results. So are you a hazardous driver, out of service violations? Like, those are behavioral components that the motor carrier can change their behavior, and the insurance company has a role to influence that by to Spencer's comments, providing equitable pricing or fairness back to those drivers and those operators that maintain the safest operation. So it's a great positive feedback loop in the system. For sure, insurance carriers have to compete on price, and their ability to match price to loss behavior, loss costs, enables them to be more effective. Those that have better information about how an operation is performing and its expected loss costs will ultimately win in the market. So information that helps them predict ultimate loss costs driven into an underwriting operation that they can price effectively, give feedback back to the policyholders on things they can do to be safer or activities they should avoid to be more risky, is a winning formula. And so that is what makes telematics so attractive. And then I think attractive in the context of additional rating variables that we're bringing to bear.
So sounds like great benefits all around. But as any new change in an industry, I can understand people might be hesitant to adopt new technology. What are some obstacles that you see in adopting telematics? Spencer, maybe you can give us a little bit about the motor carrier side first.
Yeah, of course. I think anybody, whether it's personal or commercial lines, is hesitant. Not anybody, but most people are hesitant to share more information, with someone like their insurance company. I mean, frankly, I'm not in a personal lines telematics program with my insurance company, and that reason is actually because nobody's ever asked me. My insurer has never said, "Do you want to be in this program?" That's probably up to my agent, and so that's kind of where the commercial lines telematics adoption starts. Is the communication between the insurer and the agent or broker, to communicate the purpose of this program to the insureds, which is more fair pricing. And in most cases, if you think about the fact that a small percentage of companies drive an outsized risk, that means most trucking companies are going to get a better price by sharing telematics data. you have to believe that as a trucking company, and you have to believe that as an agent, and you have to believe that my insurance company is not doing this to get a gotcha on me, right? And so the more that insurance companies are clear about their intent with this information, with this data, to the agents and to the insureds, that's what drives adoption. If my insurance agent were to come to me and go, hey, do you want to be a part of this program? I'd go, yeah, tell me more about it. Is it going to drive up my prices? And they said, I'm not really sure. I'd go, no, pass, right? And so the transparency around how this data is used and how it is going to impact how the insurer views an insured, it is really important. And I think, one of the things that we're seeing is when insureds do share data into telematics programs, when they want to share that data with their insurer, it's oftentimes the good actors who want to share that data, which means probably 80% of the industry is open to that from an insured perspective, right? Because they go, no, I'm in the honest group, I'm in the good group, right? If I'm team driving or subsea driving, I'm telling my insurer that. If I'm running in certain areas, I'm telling my insurer that. And without the insurer, again, going back to without the insurer being able to verify or know that, it's hard for them to price all the way down to the metric that they would. So the first hurdle is really, it's the communication between the insurer and the agent or broker so that can be effectively communicated to the insured. Frankly, we see insureds of all sizes, trucking companies of all sizes, from 1 to 1,000 trucks, are willing to share data as long as that communication occurs and as long as the consent and use lines of that data are clear, right? And so that's one of the bigger things. There's I would say people are, going back to my original statement, people are somewhat wary of sharing more information. And so if that's sort of your default position, we just need to be, have insurers be clear about the purposes, and the agents be clear about the purposes, and the insureds be clear about, what the outcome is. And that's really the biggest hurdle to overcome.
Gavin, can you tell us a little bit about what kind of obstacles that underwriters might be facing with the adoption of telematics?
Yeah. So throughout my career, building models and analytical products that serve to the insurance process, you end up with a couple of problems. So one is the generation of the algorithm. It's what Spencer's talking about in this context, having the market adopt the source data, so you can drive that into some sort of analytical insight or product that can be deployed into some process. The other part of the application I find is you can typically build an algorithm that's predictive, but turning that into results is a hard problem that sometimes isn't thought thoroughly through on what the implications of what that means and how that might change human behavior and how underwriters or agents will adapt their behavior based on the presence of the algorithm. So you have to think through all those bits and pieces. What I've seen inside the insurance carrier, typically twofold. One, you have a new solution or new system to be ingested into a process. There's typically a lengthy prioritization queue to both change the IT systems, embed it into your policy administration system, train the underwriters, train the brokers, claims handlers, what have you. That's a lot of change management to ingest these new solutions into the environment. That slows things down, creates a significant bottleneck. But even once you get past that part, once you've inserted it into the operation, then you need to think through what are the implications of having the product or the solution in the environment in the first place? How does human behavior change that then informs the nature of the source data that changes the algorithm in the first place? So it starts becoming a quick, feedback loop, positive or negative, depending on how you thought about engineering it. So we're aware of that, and we've had a strong line of sight into making the ingestion and the integration of the telematics solution, TruckerCloud solution, into the existing workflow as seamless as possible. So there's not a significant IT installation or backlog to build it into a platform. It's an existing platform through existing pipe into an existing workflow and just bolt it on. You're presenting data that's already being presented in the underwriting process, like mileage, for example. It's there through the inspection data. But if you thought of like your confidence in mileage presented through inspection versus the confidence in mileage standalone, presented through telematics. Now you have one understanding what mileage is, harmonized to these two sources, so they have the most precise, most granular, most accurate view. But you're still just consuming mileage is the answer. It's being sourced and harmonized across multiple sources to get you the best answer. So seamless integration, I think, is key, both speed, bringing this to market, and then minimum disruption to your underwriters as far as their workflows go to improve the existing processes they're on. That feels like a winning formula for us. It's certainly a winning formula in my prior experience, and I think that we're seeing good response from the market.
I think that's right, Gavin. I mean, there's a big piece there, which is what information. A lot of what you're talking about, getting information into systems. It's also like, what information do you want to get into systems, right? So Progressive, in their Q4 earnings call 22, which was released which they had in February of 23, they said that telematics data is the most predictive rating variable they have by a lot, was the quote. And this was their director of commercial lines telematics talking about the trucking program they have in place. But they didn't say, because we use this variable, and this variable. He didn't say, because we have more accurate mileage data and we know where fleets travel, or we are picking up more speed information. Like, he didn't say what to look at, right? I think that's one of the things that Progressive has been doing this for a long time. They've been doing this for 10 plus years or probably close to 10 years on the commercial side, and even longer on the personal line side. And so they've had the time to collect and sort of hone in on what those rating variables and insights should be. And that's the path that a lot of insurance companies are going down right now. So in addition to, hey, I've got to get this information into my policy admin system, got to get it into my workflows, I've got to get people trained on it. At the same time, they're sort of building the plane as they're flying, going, oh, and by the way, which variables should we be looking at, right? And so that's where TruckerCloud and Fusable can come together. And, a lot of our insurance companies work with us on this too, to start identifying those variables. And that's something that TruckerCloud and Fusable are accelerating that path for insurance companies, right? We're giving you the whole infrastructure to run this program and to get to the point where you can have this as your most predictive rating variable and you know what to be looking at as well. So this partnership is really that infrastructure and that accelerating body to allow insurance companies to stand up these programs quickly.
Well, thank you so much for being guests on the show today and kind of talking about this partnership and giving us a lot of this helpful insight. If you listeners want to learn more about Fusable and TruckerCloud's partnership solutions, you can take a look at some of our resources in the episode description.
Thanks, Edward. Appreciate you having
Thank you.
Gavin, great to see you.
Same. Bye-bye.